Welcome to another day in the Matrix. This is Red Pill Podcast number 108, the Solar Eclipse Review. I hope you're all having a beautiful weekend out there. We have so much to get into in today's podcast since we made it through the solar eclipse just a couple days ago. I'll be exposing 3 different scenarios to anticipate as we move into the upcoming monthly close, moving into May, and then ultimately this lunar eclipse on May 5th that we've been talking about for a very long time now. It is officially eclipse season, and we saw a lot of volatility kick into this market last week. So I'll be discussing everything. It's going to be packed full of gems, so definitely get a pen and paper ready. You're going to want to take notes, and more importantly, get comfortable. Get relaxed, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine or beer or any beverage of your choice. Get relaxed, comfortable. Today's episode is going to be jam-packed with information, so definitely invest your attention into this one. Take notes. You're not going to want to miss out. From start to finish, we're going to be really dialed in on this one and talking about some really important stuff. So also, if you are new to the Wolfpack, welcome. It's so great to have you here with us. Appreciate you joining. And if you haven't gotten Discord access yet, just go ahead and send me a direct message on Patreon with your Discord username and the last 4 numbers after that Discord username, and I will reply back to you in a Patreon message with the Discord server invite. Don't comment in this video with your Discord details. Don't email me. Just make sure you follow those instructions. It's the only way that I could get you onboarded into our Discord. Also, doing amazing with the voting system on our altcoins. Keep that up, guys. I really appreciate it. It makes everything a lot easier for me. But one thing to remember, because I saw with last week's podcast, we got Hex, a bunch of different people putting in that request, but if you already see somebody that's commented Hex before you, you can just go ahead and give that a thumbs up. And that'll make it even easier for me to determine what coins to select, because we had that happen with Casper and Hex, where it got a bunch of different, comments, but you could have been giving it a thumbs up, and it just makes voting a lot more simple, more effective, helps me out, helps out the community. But today I plan to get into Avalanche, AVAX, Hex, Casper, as well as Polkadot. And we have so much to talk about with Bitcoin primarily, because the 3 scenarios that play out in Bitcoin will ultimately influence what happens with the rest of the entire crypto market, with the entire altcoin market. So also, anyone who did not tune into the live stream that we did yesterday, wow, I believe it was almost 4 hours long. We tried initially, and the podcast or the live stream got kicked off. I don't know what happened. Something maybe with internet or the powers that be. I really don't know. But we restarted it, instantly responded to that problem, and got it going, and went for almost 4 hours. And it was probably the best live stream I've ever done. I really got into solid flow state. We talked about a lot of really important things, and it motivated me to, really, really dial in the rest of this year with my schedule. After this month of May, I see myself working really hard to finish up the final chapter of the expansion mastermind course in the chapter titled Unity of Architects, which I haven't gotten done yet. I've taken a lot of notes. I already have a lot of the content prepared. It's just I need to film it and get that out. And I'll also be adding in potentially 1 to 2 more videos into the expansion mastermind course in the chapter called Heal Thyself. And we're going to be talking a little bit about some other things that I believe are very important for those that have transitioned and started utilizing some of the information inside of that chapter and have put it into practice over the past couple months or maybe past half a year. And I'm really excited to get that new information added into that course. So, I wanted to let everyone know about that update. Again, the links that are discounted for Patreon supporters are inside of this video right here. You could see it in the comments section as well. And what I was just talking about moments ago was this expansion mastermind course. I still have one more chapter to finish up, and it's called Unity of Architects. You could see that right here. You could go over to this website, by the way, WatersAbove.com, and you could check this out. And if you wanted to see the course overview, it will give you the names of everything that is covered in that course. But yeah, that final chapter I will plan to finish up hopefully in June. I've just been really dedicating most of my time to this automatic rally, which has been, well, it's been unfolding right in front of our eyes. So I'm trying to put my priorities in order. And once we make it through the finality of Eclipse season and probably into the month of June, I will have this fully done. And I'm really excited to add the 2 new videos to Heal Thyself from a lot of frequently asked questions that I've been receiving during live streams, and just some important stuff about supplementation and mineral deficiencies, any extra gems that I could add. I'll be adding those in those 2 new videos for Heal Thyself. And the payment, the price down here is not the same as what you guys pay. This is just the regular retail price. You as a Patreon supporter get 20% off, and this is my best work to date. So it'll officially have somewhere around 80 plus videos by the time we add in that final chapter. But anyways, getting back to this, I just wanted to share those updates and definitely tell everyone to check out that live stream because it was just amazing. Really, it was amazing hangout. I loved hanging out with you guys and answering all those questions, and was just really inspiring one for me too. I was diving deep into some things that I've been wanting to talk about for a while, and I felt like it was the perfect time to explore those ideas. Anyways, let's move on. As I said earlier, we moved through this solar eclipse a couple of days ago on April 20th, which started the solar cycle. And we will be in a solar cycle all the way up until March 13th of 2025. So right now it's April of 2023, and we'll be in that solar cycle until the next 2 years. So here we are. We made it. And anyone who's new to this idea, I've actually shared it in a couple of my past decodes, but I believe this chart right here should explain it. Yes. And right here you can see, I'm just going to quickly summarize what's going on. This line is the solar eclipse that starts a solar cycle. And within this time frame right here, boom, you get a lunar cycle starting. I believe it was right here. Then the next lunar cycle was right here. And then the lunar cycle of the recent bull run was right there. So you can see that I know I don't have the lunar cycles mapped out in this, but because the point of the whole thing was to show you how when we start a solar cycle, we go into an uptrend. But needless to say, when we're in a lunar cycle, we're in a downtrend. And it's also the time frame when we get a bottom. We don't get bottoms during solar cycles. So that's really interesting. And then there's another point to all of this, which has to deal with the Bitcoin halving, which adds even more data. Essentially, we get halving events during solar cycles, and that's what leads us into new all-time highs. Not only is it the halving event, but it's also, I believe, more importantly, the fact that we're in a solar cycle. And I know that the people who created Bitcoin, the institution and the bloodline that created all of this stuff, well, they know a lot about astrology. They hire astrologers, and that's what makes this market so interesting once you dive into the utility of astrology and the actual way the market truly operates. But if you've made it this far to supporting my Patreon, I'm sure you already know these things. That's what sets my channel apart from many others. But just to revisit this idea of the solar cycle, which we only started talking about pretty much, I think, at the end of 2022, and it'll be something we continue to track for the long term because of how it tends to play out. Well, it's showing us right here that we get our lows, which is this one right there, that one. We get our lows during lunar cycles, and then when we pivot into solar cycles, we enter uptrends. And since we just started the solar cycle, we're pretty much into that energy. Now, you can have big pullbacks during solar cycles. We got one right back here with this black swan event, but it was very short-lived. And if you consider where things are at, I mean, it was only about 2 weeks that we were trading at those lows. And you could see right there that cluster of trading. Well, Bitcoin popped right up to that level of that cluster of trading within probably a month. All right. So you can have these isolated shakeouts, but ultimately Bitcoin continues to do what it does every time, which is goes on to price discovery to the upside. So we're doing the best with the limited data that we have. Thus far, things are working out really nicely where we got our bottom pretty close to the start of the solar cycle. You could see right there, boom, solar cycle, a little bit before the solar cycle, a little bit before the solar cycle, and then again, same thing happened back in November of 2022 around the last lunar eclipse. So I don't want to waste too much time on this because I've gone over it in the past, but this gives you a very clean, overview of how this works. Now, that we're effectively into the solar cycle, we can just keep that in mind moving forward, and ultimately we should be on a path for maintaining an uptrend in this market. And that doesn't mean that it'll be that way for every single altcoin. We're isolating Bitcoin right now. It's very important that you remember this, because at this stage, if Bitcoin was to roll over and come down to 17,000 or 15,000, that could send Ethereum another leg lower. That could be what it would take to maybe wash out a lot of useless altcoins, send them to zero. The utility coins aren't going anywhere. We know that. But I'm just sharing with you the way that this all works. So now getting back to the eclipse, we saw the eclipse energy really start kicking in on the 19th. The day before, and you could pretty much consider it the eclipse because in Australia during that time, it was already the 20th, right? So we're always considering things with a 3-day window. And speaking of that 3-day window, we saw the continuation of the pullback go through April 21st, which is a date that I mentioned in my Sell in May and Go Away Decoded, since it was the 111th day of the 111th anniversary of the sinking of the Titanic. So on April 14th, which was effectively Bitcoin's local high, we saw the market start to roll over a little bit into the 15th, which is effectively the 111th anniversary of the sinking of the Titanic. And I talked about this significance of the 21st being the 111th day tied to that number sequence. So this is very interesting because if we look at the Bitcoin chart and we zoom in to the day that it topped, it was April 14th. And if we go back 2 years ago to the way this market was operating, we could see right here, the market also topped out on April 14th, 2 years ago. So that's really interesting. And now it's sort of making me think about this last cycle. But really quickly, I just wanted to show that. Now, looking back at this last iteration of how this all went down in April of 2021, you can see that the cycle low was right here on April 25th, which it's April 23rd today. So we're about 2 days out from this exact date. And if you compare this to today, that would be exactly 5 days after our new moon, right into that first quarter moon that I talked about in my last YouTube video, which is April 27th. So you can watch that if you want more information regarding the April 27th decode. I'm not going to waste anyone's time here today. You can watch my last YouTube video if you want to be filled in on that. But getting back to April 25th of this year, let me just show you really quickly. April 25th connects to May 5th, the lunar eclipse, by 10 days. And this April 25th date is a Tuesday, which is Martes, which is the day of Mars. And you could look right here in Gematria. Mars gives you 10 in Chaldean. And the last time that I made this connection between Mars and the number 10 was back on March 10th, when we watched Silicon Valley Bank get ritualized. I'm sure you all remember that. I know Bearable Bull gave me a big shout out for that concept. And we also saw the crypto market do this thing where it had this big pullback into March 10th, and then it just sprung right out of it pretty dramatically. So tomorrow is April 24th, naturally, and a couple things to say about this. It will be a 17-date numerology, starting off the 17th week of this year And this upcoming lunar eclipse also has a 17 date numerology. The significance behind this number 17 is because it is the 7th prime number, and it's all about the number 7 in this crypto market. 3 sevens is your jackpot. That equals 21, 7 plus 7 plus 7, and that 21 comes back to Saturn, and that is the creator of crypto, Satoshi. That's how this market works. It's all coming back to mythology. Again, if you've been following my work for any length of time, you know this. So since we had a noticeable pullback into this recent solar eclipse, I want to remind everyone that when we're in a solar cycle, the solar eclipses become more powerful and the lunar eclipses become weaker. So since we're coming up on this lunar eclipse in only about 10, 12 days from today, and by the way, I'm not making any promises here, of course. We're in the most volatile market in history, the craziest asset of all time, cryptocurrency, and a lot of people aren't even in Bitcoin. Most people that even follow my content don't have Bitcoin. They trade coins that have way more volatility. So I just want to remind people that we are in the most volatile asset class of all time, and most people are playing around with ultra speculative altcoins. So that just enhances the volatility tenfold, right? But I want to remind everyone of this. Now, getting back to what I was in the middle of saying, since we're heading towards a lunar eclipse, I just want people to remember we can consider that this lunar eclipse should not be as powerful as the past lunar eclipses, such as the one that we got in November of 2022 when FTX was ritualized, or back in May of 2022 when Terra Luna was ritualized. So you guys probably remember that pretty well. But here on this big correction for Bitcoin, we saw it was a lunar eclipse. FTX got wiped out. And then right here in this big correction, it was multiple corrections back to back, but right here we saw what happened with Terra Luna. So this and this happened during a lunar cycle. Now we're in a solar cycle, so it should be different. But I am still very open-minded to there being an isolated ritual for this upcoming lunar eclipse. Please pay attention. The last two events that we had on lunar eclipses were isolated to particular projects. And we even had what happened recently in March with Silicon Valley Bank. I spoke about this concept during my last decode called World Reserve Decoded. Please watch this. All right. Now, it's important you know how I personally feel about this, and I will do my best to be clear. But technically, lunar eclipses again are weaker during a solar cycle, which we're in now. So for the crypto market as a whole, we should be getting as dramatic of a pullback compared to the past iterations of May 2022 and November 2022. We shouldn't be getting as dramatic of a pullback comparatively for the overall crypto market. But with the king's coronation, I am totally, expecting an isolated ritual to happen. And you can refer back to my last Red Pill podcast where I spoke about that specifically on Red Pill podcast number 107. So the lunar eclipse is, of course, a full moon, and moving into full moons tend to be a more bearish energy, which we just left the new moon and now we're moving into a full moon. We're pretty much doing what we usually do. But if this ends up being a hybrid automatic rally cycle between what happened back in 2016, which I showed you here, this move, and the move in 2019, which was this move, well, then I wouldn't be surprised if there was a recovery into mid-May or even late May. And let me touch on that again really quickly for those who are new here. Okay, so regarding the automatic rally phase in this crypto market, which is a bull trap, it's a bull trap. We saw Bitcoin top out on the automatic rally in the month of June in both previous examples. So we have here in this 2016 iteration, right there into the month of June. And then we have here in 2019, right there into the month of June. So in 2016, the top was June 13th, which was a first quarter moon, about 8 days after the new moon. And then in 2019, the top was June 26th, which was the third quarter moon, about 6 days before the new moon, which was right there on that solar eclipse, literally. If you see this line, that's the start of the solar cycle. We went up perfectly into that. So if we were to look at this in today's terms, that would give us a window somewhere between June 12th of 2023 and June 26th of 2023. The third quarter moon for June 2023, you could look right here, will be the 10th of June, whilst the first quarter will be June 26th, and then the new moon is on June 18th. But like I said, we didn't actually end either of those past automatic rally bull traps close to a new moon, so this is a very elusive sort of move, and it's important we consider the technical analysis and take it day by day and week by week in the process. All right. So now some people might be asking, well, why care about the new moon if it's not that accurate? Well, we use this because it tends to be the time frame month by month where we hit microcycle tops. And also it is the time frame we saw Bitcoin hit every all-time high in every bull run cycle. And it's the opposite for full moons. We tend to see lows trading away from a new moon into a full moon. So now we need to discuss some scenarios that could play out in the short term. The first scenario would be a micro bull trap. The concept is Bitcoin recovering only into like 29,000 or 30,000, getting rejected with a bigger pullback into 25,000, which is a lower high, followed by a micro trend reversal within our bigger horizontal trading range. And don't worry, I know some of this might sound too much for you. I'm going to be breaking each scenario down one by one, so don't worry. But the second scenario would be a lower target coming in now. So essentially us heading lower immediately. This is scenario number 2, with lower lows in the micro range. If we see Bitcoin trading below 26,500 with a daily close below 27,000, well, then that would be scenario number 2. Then we have scenario number 3, which would just be a bullish breakout. If Bitcoin started closing 4-hour or 6-hour candles above 30,600 and effectively a daily close high, which would be pretty much around that same level. So if we were to close a daily above 30,600, Bitcoin's trading at 27,600 right now as I film this. So these are the 3 scenarios we will discuss now in the Bitcoin TA. I'll be breaking it down step by step, and please take notes on this because this is very, very important at this time, and I believe it should clear a lot of confusion. But I gave you guys the idea behind June and that window of time based on the past 2 iterations of these cycles. I created 2 full decodes. One was called Sell in May and Go Away with an emphasis around the May new moon, which is May 19th. And then I had a follow-up part 2 decode called World Reserve Decoded, which talks about everything about the month of July to give June, a little bit of our attention as a possibility. Of course, we have the new moon in June there, and we have these first and third quarter moons that I gave information about a little bit earlier. Couple last things before I move on, talking about the month of July. We have here the World Bank Group. You can see they're established on the 4th of July of 1944, which will also make this the 79th anniversary. Now, that number 79 comes back to my World Reserve Decoded, and it has everything to do on the periodic table with the element gold being the 79th element, as you can see here. Then another thing is the International Monetary Fund. This is something I'm considering making a little bit of content about in the future because it's upcoming into the end of this year and leaving that 77 as we move into the post-Jubilee timeframe, which I know a lot of you want to know more about, but I'm going to be talking about this in the future. And then one other thing specifically about the month of July is the IRS. And you can see they were formed on July 1st. So I talked all about these July dates, but I wanted to add in a little bit more information about the month of July and how we have some big heavy hitters tied to finances that I left out. And this is just more to consider. So you have IRS formed July 1st, you have World Bank formed July 4th, and I talked all about the month of July in that decode, and you could have right there that full moon in July right there on July 3rd, sandwiched between those two dates that I just told you about. Now, let's get into breaking down each of those scenarios. I think this is really going to be helpful and hopefully clear a lot of confusion for everyone. So, first things first, I'm going to be looking at this chart right here. And there's a little bit of noise, and I'll do my best to make this look clean for everyone. I'm going to turn off these lunar phases. Okay. So scenario number 1 was a micro bull trap. Now, what do I mean by that? Well, first things first, I'm going to pull a Fibonacci retracement tool from this swing high on April 14th down to this swing low right there. I'm going to extend this out. I'm going to leave this on my chart for some time. And I'm also going to make sure that this is set. Okay, good. All right. So we have a typical bullish fib pull from swing high to swing low. You guys have probably seen this plenty of times. And now what we're considering a micro bull trap is because we're just playing with a very short-term time frame, not a lot of data here. And it's an idea of Bitcoin coming up into this 0.5 fib, which is at 29,000 on the nose, and effectively could go as high as the 786, which in crypto is very normal. The typical level for what we call a dead cat bounce would be the 0.5 fib. And that's an idea that I'm thinking of because Bitcoin could effectively make it up to the 0.5 fib or even this 30,000 territory, cement a lower high, get rejected, and roll over. All right. So we saw this actually happen back here where we pull a fib from this to this. And actually, no. I want to show you on a very similar time frame. I'm going to show you from here to there. So I'm taking a fib from the swing high and I'm pulling it down right to that low. Okay? And you're going to see what happens. Bitcoin made it up to the 0.5 fib, got rejected, and then boom, keeled over. And that daily close on a new low, you could see this is a candle that is lower than the prior closing candles. This was a sign that we were going to head lower. All right. So you can see that it's actually pretty similar thing going on from top over to lows. It's about 3 to 4 trading days. Let's go on to today. Looking at about a week, but we saw here many wicks coming up into the same level, 3 wicks as opposed to Bitcoin. We just saw that one level and then holding sideways pretty much comparatively and a short time pullback. That was pretty dramatic as well. See the percentage losses, about 10%. And off of closures, we're looking at about pretty much 10, 11%. So it's a good comparison. And you can see the rejection at that 0.5 fib was a classic dead cat bounce. And where it came down to, let me quickly show you. Hella dramatic pullback. Insanity. Clear shakeout. So we even went deeper than the 1618, which it happens for sure. It's not as normal, but yeah, that's a very, very deep. And technically you could probably do this. I think that would be the more sophisticated way to show this swing to this swing because of holding a little bit sideways before really keeling over. But that's not the most fair. And that's a little bit more technical and for people that are a little bit more advanced. But let me quickly return back the settings and then just share this idea for the present moment and pretty much the same concept. So I want everyone to keep this in mind. We could have a buyback into the 0.5 fib, even as high as the 786 or somewhere between the 702 and 786, get rejected and actually come back down. So please consider that. And then we have this green trend line that I want you all to pay attention to. And this green trend line was a prior resistance. You could see right there across all these trading days into this bigger rejection. We came back to it and have been holding it as a support until recently we've traded slightly below it. So Bitcoin has been snaking around this trend line over and over and over again, going back to pretty much the beginning of the year. So that's about 90 days. Consider the trend line has had many, many touch points, so that's why it's an official, legitimate trend line. And this also comes in somewhere around that 29 to 30K level. So if Bitcoin was to just mess around a little bit right here around 27, 28K, and then come up into this trend line, you want to consider there's probably going to be a little bit of resistance there, a little bit of trading around that particular level. Okay, now let's get to scenario number 2, which is the idea of lower targets coming in now. Essentially lower lows in the micro range. Now, this would be anything where we start trading below 26,500. So let me zoom in and show you what's up. Now we have this wick low right here. We have 1, 2, 3, 4 wicks coming in below 27,000. And if we were to start trading technically below 26,500, that would be a lower low in the micro cycle. And if we if we see a daily close below this red trend line right there, then that would be a sign to me that we are to expect more lows to come. And that trend line is based off of the current micro low, which was on March 18th. This red horizontal line that I have, I'm going to keep that line. I feel like it's very, very important for right now regarding scenario number 2. So now, this wouldn't be strange if this happened, okay? And I'm going to kind of talk about that now. If we were to break this trend line on a daily close, the area you would expect us to come to is 25K. So keep 25K in mind, all right? Now, like I said moments ago, this wouldn't be weird at all, because since March 10th, we actually saw Bitcoin break out in a straight line without really back testing this 26 to 25K area. It just blew right through it on the 17th of March. You could see with a single 10% green candle. Madness. So if we were to come down to fill out this range, that wouldn't be odd. And that would actually be technically positive. So if Bitcoin was to backtest 25,000, it would essentially be backtesting the resistance around the February new moon, which is right here, and also this August time frame right here. Let me zoom out to show you. So, I mean, this right here happened 250 days ago, and we've broken through that with no backtest. So it would be nice to have a backtest. I'm even with me maintaining a bullish bias. So I'll explain everything, all right? Coming down to that level and holding it as a support plus a bounce back into 28K would be incredibly bullish from a technical perspective. In the micro, it would still be a higher low structure with technically higher highs as well, with a break of an almost 300-day resistance with a technical backtest on prior resistance to confirm it as a new support. It's a very healthy, like as a technical analyst and somebody that keeps calm and has just very clear sight on what's happening, that would not be the weirdest thing ever. So let's talk about the third scenario right now that I've given you some information about a bull trap and then potentially lows or just going low now. It's still the same target, 25K, regardless of scenario 1 or scenario 2. Now let's get to scenario 3. This would be a bullish breakout. And we'll be able to identify this if we were to start closing above 30,600. If we were to start getting daily closes above 30,600, that would seal the deal, and I would anticipate that we move higher. So let me just draw some fibs, tell you what's up. So again, a very micro fib that we're pulling just from this local high to this swing low. And you would anticipate any 4-hour or 6-hour closes above this 786 to be a good sign, but technically we'd have to look at the 4-hour or 6-hour chart. So let's look at that to keep things fair. And you can see right there, we get it's 30,300. Okay, so I really like to use this 888 fib, and that's why before I said 30,600, I'm just going to keep it at that. This is a $200 move for Bitcoin. It's irrelevant to be splitting hairs here. So let's just keep it with the concept, nice, short and sweet, Bitcoin closing a daily above 30,600, and then you anticipate more move to the upside. Now, from where we're trading at now, that would only be Bitcoin making a daily close about 11% from where we're trading. That's nothing, okay? Bitcoin could do that in a single day. And be considerate that we could have a mixture of scenarios in play. And I'm going to do my best to kind of go through all of that. But let me see if there's any final things I could say about scenario number 3. Okay, so the question is now, well, if we do go into scenario 3, what would be the upside target? And that would naturally be 33,000. And that's because if you look at our macro fib pull, that is where the 0.5 fib is. So let me zoom out, go to a weekly chart. And you could see I have a macro fib from the all-time high to this current low in the cycle. Remove this level. And right here, you can see 32,700. That is the 0.5 fib. And right now, we're actually holding this 382 fib in the macro. That doesn't look bad at all to me. Like, that would be part of my weekly analysis, by the way, if you want to take notes on that. Holding the 382 fib on tonight's weekly close, having a Bitcoin close above 27,500 would be fine. I mean, technically, it would be a bearish engulfing candle. You would like to have it above 28,500, but candlestick analysis is much more helpful when you're looking at Forex or traditional stocks and indices. With crypto, that shit doesn't matter as much. I'll be completely honest. It really doesn't matter as much. But we do like to see some other things like moving averages, etc. So I'll be getting to the traditional TA in a moment. But for now, I just want to kind of keep it on these 3 different scenarios. And let me know if you guys like this way of kind of analyzing the market. I feel like it is a very simplified and easy way for even beginners to understand how I'm perceiving the moves in Bitcoin and the overall crypto market week by week. So the next big level to the upside would be that 0.5 fib, and Bitcoin can make it there in a single week if we were to have that condition of scenario number 3, which is a close above 30,600. So let's look back at May of 2022. I think this will be a fun little exercise because people might think, well, how could we move up that quickly? And well, look back to a time where we moved down that quickly. And it was right here into May of 2022 during that lunar eclipse. And we saw Bitcoin go from 40,000 down to 30,000 in probably 5 days. So let me just quickly show you. Technically, you could go off this move to right there. In 4 days, Bitcoin went from 40,000 to 30,000. So it can go up easily as fast. Bitcoin is also the best performing asset of all time. So that means it's more likely that it will go up fast than it does dropping fast. And that's in the historical data going back over a decade. So I'm just clearing people's minds right now from some emotional things that people might be experiencing since this recent pullback. If you don't think Bitcoin can pump that fast, well, look at all the times that it went down, and it works pretty much all the time. You could see how choppy Bitcoin is in so many different iterations. Just like here, you saw how quickly we went down. Look at how quickly we went up. It's almost the identical momentum and velocity, just in opposite directions. So I just want to let you know that we can do this, and look at what Bitcoin technically did back then. Between this top around 40,000 on the nose down to this wick low, Bitcoin lost 36% in 8 days, and it's trading effectively around the same place it is today, through the same fractal range that we'd be anticipating anyways if we were to have the finality of this automatic rally. So Bitcoin can lose $10,000 in 5 trading days, and it could gain $10,000 in 5 trading days. We've seen it plenty of times. Just look at this swing right here between there and that. You're looking at a 4-day 25% gain. From right here, off of that swing to that swing, you're looking at a 40% gain in 1 trading week. Happens often. So we're kind of in that territory right now of confusion, and people want to know, well, like, what's going to happen next? And that's why these 3 scenarios should be very helpful for you, because it paints a picture of what levels to look at according to daily closes and what's more likely to happen next. So I really hope that helps. Really hope that helps. But getting back to this would be like watching Bitcoin go from where it's trading at now into the golden pocket territory in a single week. And remember, it's only April 23rd right now, with historic data showing us that this automatic rally can finish off in June, right? Even if it was the very end of May. So if we can go up $10,000 in 5 days, that would be kind of what we anticipate anyways for the finality of an automatic rally. You could look right here at how the automatic rally ended back in 2019, and it looked like a blow off top, right? Okay, so let's, before I move on to Ethereum, I want you to be aware that this is not hopium. I am sharing very thorough and realistic scenarios, and I want you to be level-headed and conservative at these times and do what is best for you and your financial situation. Do not copy me. That's not what this is about. I am in my process of revealing everything that I do and being transparent, but this isn't copycat trading. I'm at a totally different place than 90% of people, and I've talked about this in my last 2 decodes that I released. How I bought Bitcoin at 7,000 and I have my XRP at around 18 cents. I have my Ethereum at around $400. I already de-risked in 2021. I made handsome profits during that bull run. I'm in a different place than a lot of people right now. So it's not best to copy my moves. What you do is you pay attention to the teachings of the analysis and then apply the analysis and the teachings and the strategies to your situation. Okay? So I am not a financial advisor, and this is not financial advice. You really need to be conservative at these times. So as for what I am doing in response to this market, I am waiting for Bitcoin to complete this move to the upside into the 0.5 fib right there around 33K. And if it does not make it there, then I am totally fine with that play. It's all good in the hood. I invested when I did because I was willing to risk, because this is a investment, and an investment always has to be, you have to look at it from a perspective of we're playing with fire here, and you have to have a long-term outlook, outlook in general with any money that you put into a market, because once you put it in, you can't control it. You could only take out when you're ready. And that's always been, known. For the sophisticated investor, you should already know this. But I just want everyone to know that if Bitcoin does not make it up into the 33K territory, then it's all good in the hood. I'll just wait it out. I'm perfectly fine with that. And I will sit this out until I get my levels. Now, if you're someone who can't afford to sit this out, first of all, I completely understand. I've been there in the past as well. But consider the first scenario I shared of a bull trap into 29 or 30,000 and then Bitcoin rolling over into 25,000. Just consider that. If you're somebody who wants to protect capital and you can't afford to sit this one out, all right? So let me show you something really quickly. I'm just going to pull a bearish fib, which is a reverse fib from this current low that we got right there in the structure up to the current high. Actually, one second. Let me make sure I have the settings corrected. This is the proper pull. Excuse me. From our current low in the structure to our current high. Basically, I'm just pulling the fib in reverse. And you can see right here that the 1618, which is the golden ratio, is sitting at 25,000, essentially right there. So this is giving me a technical level to really consider. So if we had a pullback to 25,000, even from this scenario, it could still be bullish, right? And I talked about that earlier. And for the long-term players such as myself, Bitcoin is not looking bad until it closes dailies on a new low in the structure. And what would that low be? It would be right here. If Bitcoin started to close below 20,000, which is the March 10th pivot, until then, we're still in a higher lows and higher high structure since mid-March, which means overall this is looking pretty bullish. So we can have a combination of scenarios, and that'll be kind of what I wrap this up with, and then we'll move into ETH and the altcoins. Now, the combination of scenarios would be scenario number one, which is us first initiating with a bull trap, coming up into somewhere around 30,000, then rolling back down into 25,000, which would be scenario number two, naturally. Then we could confirm this prior resistance as a new support and actually bounce another leg higher. So it would look something like this. Bitcoin moves up, rejected, comes down, holds this level instead, comes up, and then boom. Now it goes another leg higher. Essentially looking exactly the same way as this fractal right there, where you have moving up, which is this. Then you have small pullback and one leg higher. Then you have small pullback, one leg higher. Then you have a nasty breakdown, and then pop out of it and go another leg higher. So we could totally have that in play. And I want people to be aware of that. So these are just some ideas. And at this time, it's really important to exercise the discipline of patience, but also don't sit around waiting if you're uncomfortable with this type of volatility and you want to de-risk regardless of what happens next. I actually had an overwhelming amount of people reach out to me via messages and emails thanking me for teaching them about this Eclipse, and so many months in advance, especially because they bought the lows around this Eclipse back here in November and into January, into the new year. They dollar cost average during this big time frame, which wasn't short. It wasn't a small amount of time. Technically, from this time frame here around the last eclipse until getting out of it was 60 days. So that's 2 full months, which is 8 weeks. 8 weeks is pretty much past my normal 5x DCA concept. So a lot of people actually practiced what I was sharing back then, all the information that I was exposing. And it blew me away because they were able to get in, and then they did de-risk into April 14th, April 13th, April 12th, etc. And it was pretty beautiful to hear that this idea of Bitcoin making it to 30K was initially unbelievable for some people 5 months ago, but now you can see the power of these eclipses, especially the start of a new solar cycle. And here we are. So those are the 3 scenarios. I reviewed them as thoroughly as possible, and I will continue to use these 3 overall ideas compiled into one overall concept to review Ethereum and XRP and the following altcoins, because Bitcoin is the mover of the market, and you could essentially apply the same idea to everything that has not already completed the automatic rally phase. Pay attention to what I just said, because some projects have already completed the AR, so they have a different thing going on than Bitcoin, Ethereum, and XRP. And as always, I will do my best to be clear whenever I see a completion of an automatic rally, which I have in so many different scenarios playing out during these coin reviews. And we'll even be getting one example later with Hex. And I've already talked about that before the automatic rally several times, but we'll be reviewing that today. Oh, actually, let me just do a little bit of regular analysis on Bitcoin to see what's up. I'm looking at the weekly really quickly. As I mentioned before, we do have a bearish engulfing candle. We would technically be breaking lower than 5 straight trading weeks if we were to have a closure at levels today. Ideally, you'd want to have a closure above 28,400. That's probably not going to happen, but you never know. We do have a little bit of a gap of time when the Chicago Mercantile Exchange opens up, Forex, and the Dow. That could be bringing some liquidity into Bitcoin. And if it was to pop up with a miracle 3% into the close, it wouldn't be something that we haven't seen before, especially after big dramatic pullbacks like this. You could see right there, this hammer candle right there, how quickly it got bought back up into the finality of the week. So just to consider, this does look a little bearish. Even though last week's analysis was looking awesome, we know we traded into an eclipse and we anticipated volatility in the eclipse. So this is how this crypto market works. Now, one beautiful thing to see on this weekly chart is we are holding the 8 simple moving average. That's gorgeous. That looks perfectly fine to me. And we do have these 200s beneath us around 25,000, which I talked about several times. So we got below this 200 around June of 2022. We got rejected on it around February, but then we came back above it, and we have yet to backtest it as a support. So I'm very open-minded to 25K being in play soon. But if we were to just go up from here, that wouldn't be odd because we're in Eclipse season. Let me just look at the daily really quickly and see what's going on. So we have yet to backtest the 55 simple moving average. After today's close, we'll continue to see it slope to the upside. So that's very positive. The fact that we have the 55, 200 exponential and 200 simple sloping to the upside is really nice to see. Let's look at our our EMAs. Okay, so our EMAs are starting to coil together, sloping to the downside. We've been closing below the 34 EMA. That's not good. Bitcoin likes to do this shit where it just goes from like hyper bullish to super bearish really fast. This is like, you know, the typical sentimental swing, very bipolar. But this close below the 34 is not ideal. So getting back above the 21 would be great, especially since the 813 EMA and 21 EMA are coiling together. Once you start getting this 8 crossing the 21 to the downside, that's definitely a sign that that's not so good. Let me look at the RSI. Okay, well, did we close lower? Not technically. This RSI sitting at about 72. This RSI sitting lower low at 63, and then we close technically higher but with an RSI of 41. Okay, so this is starting to look a little bit like a bullish divergence. I don't want to be making these calls, but like it is just what it is. Technically, we're holding higher lows technically. I mean, within like a sliver of a percent, but the RSI definitely is on a downtrend while the price has been maintaining an uptrend and an obvious uptrend. You have high, higher high, higher high. You have low, lower. I mean, on the wicks, I wouldn't judge us on the wicks. I'm looking at a daily chart. So these RSI readings are coming in on daily closes anyways. All right. This could be the start of a bullish divergence. Yeah. Well, there you go. Yeah, this is the start of a bullish divergence. If you look down here, you can see that RSI did almost make it into oversold territory. The last time Bitcoin made it into that dramatic oversold territory on the 12-hour, I was very adamant saying that this is a shakeout and I anticipate a bounce, and that's how it played out. So I actually like seeing Bitcoin go dramatically into oversold territory. It's always a good sign of a bounce to come. And if you look at this 12-hour chart, you can see that the 200 EMA and 200 simple are sitting around 25,000. It's gorgeous. Okay, so this is really a key level, guys, 25K, to just keep in mind. If Bitcoin's going to shake out and drop another, if it was to drop another 9% from here, that wouldn't be the weirdest thing on earth. Now, if it started closing dailies below the 200 simple, then I would start getting a little weird. I'd feel a little weird, but you still have no trend reversal, micro trend reversal until closing on new lows, which would be below 20,000. That is the most thorough analysis I could possibly give for Bitcoin and this whole market. Like everything that I've talked about over the past hour, pretty mind-blowing shit. To summarize it all and to have it be so thorough and laid out, like this is going to be one of those red pills that I think will be very important, and one that you could even go back and watch a couple times and have a lot of value. So here we are on Ethereum, and the thing I don't like about Ethereum, I talked about in my last YouTube video, which is the fact that it pretty much did come up into automatic rally targets. I believe I might have talked about it on a Twitter post. So again, go follow me on Twitter. It'll definitely help, especially because there's a scammer pretending to be me who even paid to be verified. It's pretty fucking sad, but that's life. Right here. So I wrote on April 14th about this bear cycle from 2018 to 2019, and I took the fractal and I laid it over, and Ethereum essentially got to that level, like within a hair, pretty much the same level. So that does worry me a little bit. And now what would really worry me is if we have that scenario number one play out on ETH specifically, because it did technically complete an automatic rally. It made it up into the 0.5 fib. Bitcoin did not. Bitcoin only made it up into the 382. So we saw what happened last time ETH went into the 382 or into the 0.5 fib, and it was right here. And that was the end of the automatic rally. That's why I gave that's why I made this tweet. I'm updating people. I'm letting you know, like, this is what ETH did last time. So you can't sleep on this shit. But that is what it technically did. It made it into the 0.5 fib, and then it had a little bit of a bull trap. And let me show you what happened. We're going to just take a super micro fib pull, swing high to swing low. And what do you know? We come up into the 0.5 fib, close 2 dailies below it, and then keel over. Dead cat bounce and went into a trend reversal. So looking at what we're looking at today, that would be like it not being able to get above daily closes into 2000 again. If it could start closing dailies at 2000, then that would be fine. But if it was to keel over there, I might even de-risk my ETH at this, because this is clear TA. Like, I'm not going against what has happened in the past. If I do, I'm going to probably when I end this video, I'm going to go ahead and adjust to have a conservative limit order somewhere around 2K, just to play the market safe. I'm not selling all my ETH. I'm just securing position. I'm doing what is best for me, not financial advice. So that's utilizing the TA as part of your trading strategy, and you adjust accordingly. And to me, there's no difference between 2000 and 2100. Who cares? So if it was to roll over from there, it's still a gorgeous play overall. And given my scenario of having my average of my first buying of ETH below 500, then it really doesn't make much of a difference in the big picture. I'm just doing a swing trade off of the automatic rally. But now, if we were to recover and make another leg higher, naturally we'd want to consider this 618 target. And I don't know if unless Bitcoin does go up to 32,000, then I would not anticipate 2,400 or 2,500 for ETH at this time. So I'm not giving hopium. I'm just telling you what to expect if we were to start closing into a new high in the structure, which I guess would technically be somewhere around $2,120. And then on the downside, you have this 382. That would be a clean level for us to return back to. It's a typical level to return back to. And you could still have that mixture of scenarios play out where we come down, hold the higher low structure, and then bounce. Because you can see right here, we have lows coming in all the way back in June. Then we have higher lows, technically a higher low in March, and then have been maintaining higher lows. So it's great. This high right here broke the high right there. So we have a technical higher high. This is bullish. I get it. There's been a pullback recently, but we're still looking fine. I'm not going to personally play around with ETH too much because it's not the most bullish at the start of a solar cycle. Bitcoin is, and some other isolated projects are, but ETH has been really performing well considering its pullback that it had coming in early, holding trend structure beautifully. I mean, it only had an 80% pullback. In the last cycle, it had a 95% pullback, and that's what 99.99% of altcoins did this style of pullback, whilst ETH only had an 81%, very close to Bitcoin. This is making me feel really good about ETH. I don't feel good about the ERC20 market, but ETH, yeah, this is looking like it's maturing over time, and I really like that. So, yeah, I shared my feelings about coming up into 2000. I'll think and reminisce a little bit after I post this podcast how I feel. I'll definitely need to go into my trading plan to see how much of the ETH I want to get rid of, maybe only like half, or I'll do like a 30% on the 2000 and then keep maybe a 25% at a lower level just to see, Anywho, let's move on to XRP. Oh, and by the way, whenever I sell or buy, I share it in our Discord. So you'll be getting updates when that happens. Now we're looking at XRP officially Bart Simpsoned yet again. So we just have to take a look at Bart real quick. By the way, I found out over this weekend that XRP is my second biggest position. So yeah, I'm having fun. Yes, I'm making fun of this, but true love is tough love, right? We talk about this often. I'm a big XRP holder, apparently. I did not know that. I had to reassess my portfolio due to tax season, and then I was like, holy shit, it's my second biggest position. I should make it to maybe I'll do one live here on this podcast. Would be a good emoji for this. Maybe the Mecha Cube. Get XRP Army in there. Our favorite cult. Oh man, Twitter's been fun for me. It's impossible for that platform to vampire me. It's impossible. It's hilarious, but I found that it is a good way to reach out to some people who haven't found my YouTube, and they've thanked me accordingly. So we're using it as a tool, not as a weapon, but it's like a very parasitic platform. I could totally see why people feel entitled to share their opinions there. Anyways, you guys know Chief Wolf. I live. I'm not a zombie. But getting back to this, we got Barted again. Another Bart. We got Bart and Lisa Simpson. And all jokes aside, though, this 54 cent level is a demon. You know, like in a good way and a bad way. Of course, demons aren't negative. They're just a computer program tasker. But that level right there, it's obvious now. And I made several call outs about the 54 cent level in the past. I prepared for it. It hit, but we struggle at it a lot. It's now kind of becoming worrisome. But let's just take all of that, put it on the sidelines, no emotions here, and analyze this. And we have the 236 fib in the macro. So this big time fib pull is all the way from 196 down to the swing low recently in June. And we almost made it into the 382, but we couldn't get above it. And I told everyone, it is not an automatic rally on the asset until you get above the 382. So we're still not technically engaged into the automatic rally for XRP just yet. And in a macro sense, we did make technically a higher high since this BART fractal back here, and we've been maintaining higher lows. So things are looking pretty good, and we need to hold this 236 fib. Otherwise, we're going to gravitate back down to this trend line potentially. That'd be a pretty big washout. That would be like coming back to 37 cents again, and that would make this look nasty. Now, can XRP do that? Of course. It's done it so many times. How could that even shock people? And even if it did it doesn't like cancel out the opportunity for it to make it up into automatic rally territory sometime this year. It's very possible. XRP is a weird asset. It does what it does when it wants to. So with that being said, I need to see a clearing of 54 cents on a daily. And this area right here of the 382 is really the target area we need to close above. Until then, we're just trapped in this sideways range. The 236 is technically a level you want to consider. And then I have 41 cents on my mind because we have all of these supports, fail, rejection, rejections, and then breaking through that 41 cent level breaking through that 41 cent level effectively brought us up into that spike into 58 cents. So that is a key level in the downside, 42 to 41 cents. And let me just put a horizontal ray on my chart to track that. Keep it at 42. All right, so there it is. I don't really need to say anything more about XRP at this time. This does look like a W potential that could have been broken out, and it's reached its upside targets, but we're just trapped in this horizontal trading range. We need to see some life force come to XRP very soon. And I assume that having Bitcoin break out into another leg higher would be what facilitates that for XRP. Now, let's look at Avalanche. Okay, it's got some long time data. We have data going back to 2020, but we don't have data going back before C19. I don't like that. I've exposed why I don't like that because there's not a lot of chart history in this stuff. And moving into October, if you don't have any levels or trading data before C19, then I think it doesn't give us any confidence that this can hold structure. I assume that this could actually break below 1050 later into this year, and it could cascade all the way down to $3 again, because there's thin air between $10 and $4. Just thin air. It was all through this one breakout and no back testing along the way, and still has not back tested anything below $10. So $10 is a very fragile area. Now let's look, how much have we lost? 92% pullback. Okay, that it could go deeper for sure. If ETH can lose 95% back in 2019, then this shit can too. And if this only lost 95%, it's coming into the middle of this thin air range. So this thing could probably come down to $4.60 easily. Yeah. Okay. Now this has not technically made it through its automatic rally levels yet, because it hasn't approached the 382 just yet. Getting above the 382 would be a good sign. That would take it to about $30. And it might not even have an AR at this time, just because of how its bull run went in the past, and it doesn't have a whole lot of data. See how this went. This is pretty decent. Yeah, 5,000%. It's pretty amazing. So off of this fractal, you're looking at about 3,000%. It's looking good. Yeah. So the next level on the upside to consider would be $30 flat. That would be right around the 382 and right around this spike right here that we got. And technically, if it could close higher than that, that would be on a trend reversal path plus above the 382, and maybe it hits $40 on an AR at best. And downside, I would be very open-minded to, let me show you something really quickly. I'm going to pull a fib from this level right here to the swing low. Okay, and we do get potential 1618 into this $58, and that would be where you would expect, but because of this stage in the market, no. Making it all the way up to the golden pocket would be hard at this time. It really needs to get going soon. This is why I teach about the 0.5 fib in the dead cat bounce scenario, and I talk about it so much, because it's very, very important that we keep that in mind. Yeah, no, I don't know about this one, man. Gotta admit. Yep. So with that reverse fib pull, the bearish fib pull, it brings my golden ratio down to 550, which is right around the territory, and that would not be weird for a spring. So here's your buying climax. Here is your selling climax. You could have a little bit of an automatic rally, maybe into 34, 39, that territory rejection, come back down into $5 and lower as a spring target into the end of this year. I would not be confident holding this project just because it has very limited data. And as far as I understand, I'm not entirely sold on anything outside of the realms of the ISO 222 compliance besides the ones that I've already picked, such as VeChain and Theta. And that's just due to my own research, and I don't want to over diversify. So it's not like me saying Avalanche is bad or a bad project by any means. Please don't take it that way. The chart even doesn't look that bad. The chart doesn't look bad. You know me, right when I look at a chart, I'll instantly say, okay, this looks like shit. This doesn't look bad. It's just too limited in data, and it doesn't have anything before that C19 Black Swan. So if there was to be a Black Swan moving forward, I mean, damn, I think this thing's going to get hit hard. So I'm just being honest. Now we're looking at Hex. All right. My goodness. Okay, so unfortunately, the Hex chart that was available, the one that I used to use, it got deleted for whatever reason off of TradingView. So I had to get this newer Hex chart, which has very limited data. And I just copied over the same sort of statistics from the last chart that I shared, which it was right here. Maybe some of you know about it. It was this chart back in March 24th. And then I had a little shout out back on March 21st. And I was talking about it right there about the 10-cent target. And it was this chart. This chart is old. I've had it since probably like my first or second my first or second interview with this guy, Crypto Coffee. So shout out to him and shout out to anyone in his community that has made it over to my work. I really appreciate you guys. I'm grateful for all your support. It's beautiful to have the Hex community be open-minded to my work and open-minded to some of the strategies that I use. And now that we watched this level, you can see right there, the blue says 11, and then the next blue line says 12, and then the top blue line says 15. That would be like a more dramatic spike. But I sent this out saying Hex just hit 10 cents and is heading towards the upside targets that I shared during my last interview with Crypto Coffee. To the Hex community, this is not a time to get greedy during this rally. The second half of this year is going to be bloody. Words of wisdom. And shortly after that, a couple of days later, we saw Hex make it into these levels, and I actually have that marked right there. It did it in a single day. And went a little bit higher the next day into about 131, which is really funny because 131 is your 30-second prime number. Yeah, wow. Oh, man, there's so much to say about this Hex project. It's really wild. I know I did a little decode in it the last time that I covered. I think I did it in a live stream or something like that. But anywho, this is like a blow off top. And what I don't like about this is it came back down into this W breakout structure right around the neckline. And then once it broke beneath the neckline on April 6th, it started treating that level as a resistance and then confirmed resistance on April 18th when it closed the daily below these structural lows and then just went down all the way to 5 cents. So effectively off this top, it has lost 56% in short order. That ain't good. And this really does look like how an automatic rally ends. That's how the automatic rally looked for Ethereum in 2019. This looks identical. So just be very, very cautious because we started dipping below the 382. And by the way, this fib is drawn based off of the same price target highs as going back to this chart, 51 cents, the buying climax. It'll work no matter how you do it. I just took the fib and I started it at 51 cents, but then it deleted all the data for whatever reason. I don't know what happened with TradingView. So yeah, the fact that we're trading below this 382, if we start to treat that like resistance, which today could be the case, you can see we closed beneath the 382 going back on April 20th, the day of the eclipse. And right now we're trading slightly below it, showing it to be a resistance. And then you have your structural low coming at 0.54. On March 9th, if dailies are closed below that, that's going to be a signal that this was in fact your top of your automatic rally. So keep this horizontal level in mind right there, 0.55. And something like this, closing beneath it, you could have a move straight to your 236, and then this will just look like a blow off top, right? Like a Christmas tree. So I know this might be like making some people who own Hex or whatever feel like their stomach is starting to hurt, but I told everyone about these levels last time and I said, don't be greedy. It's important that you watch out because this stuff happens fast, and we watched it happen. And I know when I was giving these call outs, like people weren't so happy. Like it wasn't getting the same attention as it was when I was talking about the upside targets. When the targets hit, then people started getting like, oh no, I thought it would go higher. I thought it would go higher. This analyst told me it would go higher. And I was telling people like, it's not about how high it goes. It's about you taking action and having some sort of response to the market doing this. It's just to help you guys. That's all it's about. So this could turn into like a weird head and shoulders. Who knows at this time? I gave you the targets. I think it's important to consider this 382 becoming a potential short-term resistance. You could draw as many lines as you want on this shit, but the next target to consider is probably your 236. Now, what happens if we were to come back up again? Well, that's definitely possible with a lower high rejection at the 0.5 fib. So if Bitcoin was to go up to like 33, 36, maybe 40K, I do think that Hex can have one more move up into this 0.5 fib. So let me just show you with the same sort of strategy that I shared earlier, which is pulling that macro or the micro fib pull. And you can see right between the 0.5 and the 0.618 is right there. It's the exact level. take it out, and you see the 0.5 fib, which I was just talking about. It's right there at those levels. So that would be kind of where I would be like GTFO, like I would just take it and run, because it could go higher. Sure, anything's possible in the matrix. There could be some sort of isolated thing that happens specifically for Hex, some update that happens, who knows. And if you're really into the Hex ecosystem and you know all about Pulse Chain, PulseX, and everything that's happening, then great. But you could maybe determine what could happen there. But I'm going to just leave it at that. I think that this is how most automatic rallies end. And if we were to get a little bit of a buyback and you owned Hex, I would consider de-risking. Again, not financial advice. And also, I don't own any Hex. There was like a rumor going around that I was telling people to buy Hex, and why would I tell people to buy something that I don't even own? And I've been public about me not owning it since I communicated with Crypto Coffee on every single interview that I've done with him. I've never... I'm analyzing it because people are interested in my skills and professional ability to analyze markets. Purely that. I'm doing it for their community. I don't own it. So yeah, this is the full analysis on Hex. I hope you guys enjoyed it. I know that was very sought after, and we watched all of my calls pretty much come to fruition with accuracy that I must admit is pretty wild to see that happen. Let's move on to Casper. Yeah, this is another one that was really hard to do TA on because I don't have a lot of data to work with. Again, that lowers my confidence substantially. I have a fib pulled from the all-time high according to CoinMarketCap, which is about $1.36. That would be your buying climax, I guess, but it kind of launched at these prices and just went and lost 99.99% of its value. So, what is good to say about, anyways, I know a lot of people are interested in Casper for whatever reason. I get it, but this is one of those times where I load up a chart and I say, this looks like shit. Let's get that out of the way. But anyways, now we're looking at this and you have your 236 fib right there and clear rejections over and over again at this level. This would be your first technical rejection, and it came in at these prior supports, which we broke down through during the lunar eclipse. So Casper likes to react to overall Bitcoin and eclipses as well. That's obvious. And there would be your sign. Coming up into that level and getting rejected is not the best thing, but I have these horizontal levels drawn for a reason, and it looks like we've tested those, and if we were to start closing dailies above the 236, that would be really, really nice. Keep that in mind. Could this make it into the 382? Sure, because we have one little touch point there on March 31st. We went up in a straight line pretty quickly from the 236 fib to the 382, and that could be exactly how that plays over again. And that would be a nice move for Casper. That would be about 100% off of where we're at now, and that would only happen if Bitcoin was to make another leg higher. So just keep that in mind. And after it does that, could it fold over and start trading back into 2 cents or even lower into the end of this year? Yes. This thing is on price discovery to the downside. That's why I would not plan on investing in this. This is a trading opportunity at best, but long-term hold, absolutely not. It's scary to hold shit like this. Moving into the eclipse of October, no way. I would just swing it, but I would, if I had it and I was building a position here and I'm in profit right now, I would really just be looking to de-risk 100 as much as possible, and then consider reaccumulating a fresh position in it in like 2024, just to be honest. Okay, polka dot. And then we're going to wrap this one up. Long red pill, but poured my heart out into this one, man. This is really packed with data. Okay, so Polkadot lost 92%. So that's your buying climax, that's your selling climax, and now we're having trouble getting above the 236. Okay, so we have a low, higher low, higher low. We're kind of teeter-tottering at that level right now. That could turn into a W pattern, and I would assume that the measured move of this W pattern takes you somewhere into slightly below the 382. And thin air between the 382 and the 0.5 fib. And we see this happening here with this V-shaped recovery blast off and the fact that we fell through it on the lunar eclipse of May 2022 in a straight line. So we can definitely break out on Polkadot and move through 382 to 0.5 fib really fast. And then your technical peak would be somewhere around $23. That's nice. But I don't think it can make it up that high. That'd be a very, very dramatic move in a short period of time. I don't think it's going to move 300% in the next month and a half. It'd be very unlikely. So if Bitcoin was to break out, of course, we could see this approaching the 382, maybe make it into about $14, $16. It'd be a nice range to set some conservative take profit orders. Now, as for the downside, this thing better hold 370 in the future, because if it breaks down, this thing can go all the way to $1. That's how it launched. There's some exchanges that this thing was launched at under $1. So it could clear all of those levels to the downside, and then just, if you consider 95% down from here would be $2.37. That's not weird, but that's in this straight line thin air range. So it could drop straight to $1. Could DOT be $1 in the end of this year? Sure. Why not? Polkadot ecosystem is great. Kusama is great. I know enough about it to be aware, but with the way things are heading in the future of cryptocurrency, I don't know, man. I'm very adamant about the fact that you need to be careful in your belief of the technology and the people behind these projects, because it looks like it's all good in the hood until it ain't. And there was a lot of promising things for Polkadot when it was really bullish, but then it lost 92%. No different than everything else. Just like we saw Hex lose 95%. Again, whatever. You can have all the tribalism and all of the community-based factors on your side, and you could still lose an immense amount of value from the top. That's just how crypto works. Until it becomes more regulated and more of a commercial, everyday conversation, a household conversation, well, we still have a lot of wiggle room for intense volatility in either direction. So just consider that. This Polkadot chart is looking very similarly to a lot of other charts that I've seen. It doesn't look like complete shit, but again, no pre-C19 data, very limited data overall. Could it be breaking through this support of $4 into September, October? Absolutely. And I'm not ultimately that really that bullish on the automatic rally for this project, just considering that it has yet to breach the 236. Whilst XRP has, Ethereum has, Bitcoin has, this thing is lagging behind. So I'm going to wrap it up at that. I hope you guys enjoyed today's podcast. It looks like we're getting a little bit of bearish energy right now. I could see XRP has hit 47 cents, but it's kind of keeling down now back into this 236 territory. Again, I shared all my macro analysis on Bitcoin as well. Keep that all in mind. Definitely rewatch this if needed. It had so much information. Easily the best Red Pill podcast to date. I hope you guys feel the same. I'm going to be wrapping this up now. I appreciate every single one of you. Much love.